Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 24th of July, and starting off quite firm for the FTSE near recent highs. The level to break, I suppose, through 76.80. The other point to note at the moment is the way that we had a down cross for the FTSE 100 through a rising 200-day moving average. That's quite a rare event and is normally actually a very good sign, sometimes actually, or it can be even more reliable than a golden cross, so that is something to take note of. Through 76.80, looking at 77.80, and then the big prize, if we get through 77.80, heading as high as 8,200 sometime later in the summer, maybe in the autumn, which obviously seems rather unlikely, but that's the charting at the moment. On the downside, a break of the 200-day line around 75.70 could lead us back to that broken June resistance line at 74.50, but at the moment certainly we're looking up rather than down. Onto the DAX, which was rather becalmed last week for some reason, but this looks like a sideways consolidation, a very positive one, a bull flag at and above the rising 50-day line at 16,000. Above that, we're hoping for a pretty imminent break of 16,400, the June resistance, and then that would take us up to the top of that rising trend channel from August last year as high as 17,200, maybe by the end of next month, i.e. end of August. RSI at 58, which is right in the box seat for a rebound, and we've had the bear trap for July already below 15,700, testing the floor of that 2022 rising trend channel. Onto the Dow, which in some ways could be regarded as the star of the show. I suppose it also has some way to catch up in terms of where the equivalent area for the S&P is, but we hit the top of our March rising trend channel, 35,100. Above that, looking for as high as 37,300 by the end of next month, backed by the rising 50 and 200-day moving averages. The downside at the moment not expected to be lower than 34,600, which was basically the June-July double top, which we then broke earlier this month. Moving on to Bitcoin, where it's been rather frustrating for the last month and 1 month of consolidation, and this market really testing the floor of that, what was supposed to be a bull flag. Now it looks like a bit of a top, or a bull trap top, through 31,000, but downside probably no lower than the 50-day line at 29,000, and if we can remain above that 50-day line, which is still rising along with the along with the 200-day moving average, we could still get that elusive break up to the top of that rising one-year trend channel, just shy of 36,000. Nightmare scenario is that we have to test the floor of the rising trend channel from last year down to 25,000, and the 200-day average at 26,000. The most negative part, though, I suppose, is today's break back below RSI 50, the RSI at 47, so that does suggest a test of the 50-day line is at least on the cards, even if we then flip higher after that. On to the stocks of the day, and some news from Canadian overseas, which has caused these shares to bounce off that line there from back in February. We were already looking for possible signs of a turnaround, so a break of that resistance line there from back in June, which I suppose you could say has been achieved. That was versus the 1.6 pence level. We've gapped up today, so it's a bear trap gap reversal from below the old June floor at 1.9 pence. End of day close above 1.9, and we could be looking to retest July resistance up at 2.8, which obviously is not great in the scheme of things, but obviously looks like a party in percentage terms of the upside compared to where we are now. But a bear trap gap reversal there, one of the more bullish, probably one of the few bullish signs that we've seen there on Koppel for quite some time. Best case scenario is up to the 50-day line and the top of that triangle there from June, which I've adjusted down around the 3.25 pence area. But end of day close back below 1.6 would rather spoil the party. On to one of last week's big winners, which looks like it's starting to be this week's big winner as well, up 10% for Cleantech Lithium, just missing my line there, which was, I suppose, heading up to 70p, but it could have hit it around 68 pence. We just missed it. The high today was 66.5, but still all good at the moment, and above the 2-day support there at 58 pence, looking for 70 pence. The big break for the shares from current levels would be if we broke 70 on an end-of-day close basis. That would not only open up 93 pence February resistance, but up to £1.20, maybe by the end of September. The reason that we're quite confident, the reason maybe the shares are doing so well, is that both the 50 and 200-day lines are both rising. They've been rising for some days now, and when they're both rising near the lows, that is a very big positive, as was the unfilled gap to the upside this time last week, which tends to start the best rallies, and that has been the case over the last few days. On to a stock which is not quite in the golden scenario that we have at Cleantech, but still seeing Caracal Gold bumping along the bottom, this potential rising trend channel base from February. The line there around 0.3, above that looking for the 50-day line at 0.36, and then maybe retesting June resistance by the end of next month towards 0.48 pence. But what it looks like is that 0.3 is the line in the sand for the bulls to defend on Caracal. On to GMET, which has managed to push into all-time record ground at the moment. The initial high here for the shares around 8 3/4, and if we can get a decent end-of-day close above 8 3/4 and maybe a weekly close, then might suggest that we're heading up towards 11 pence, which is the top of a rising trend channel that I've drawn. Imagined that's the top of the rising trend channel there at 11 pence, maybe over the next month or so, given the current pace of progress. What will help here is if we have both the 50 and 200-day moving averages rising, the 50-day lines rising. Maybe over the next week, the 200-day line will start as well. Upside value while we're above that 50-day line at 8 1/4. Onto a stock which has bounced quite massively today, and it's interesting that we already had our eye on this situation before. Itsarm. Here you can see that we were looking for the shares to hit the top of a broadening triangle there from April, but obviously until Friday it looks as though nothing was going on at all. Bounce off the May support there at 0.16 and unfilled gap to the upside through the 50-day line suggests that while we're above a resistance on the way down at 0.58, we could head up to a penny over the next few weeks, or perhaps even sooner. Moving along to one of the stars, the other stars, star of last week, which was Optibiotics, and here we had our initial target there at around 12-13 pence. The next one was 20 pence, and today we've had an unfilled gap to the upside through that 20 pence zone. The target now up to as high as 34 pence, maybe by the end of next month, while we remain above 19 pence, where that line from December currently is. But a fantastic performance there. And actually it all started with a gap close, a bear trap gap close signal there, with the on the back as far back as the 30th of June, when the shares were only 8 or 9 pence. So you can see what the charting can do if you are watching your stock. Onto a stock which doesn't normally feature here, because largely because of the market cap, but you can see that Ocado has delivered the goods. We had a bear trap gap reversal there back in June, and another unfilled gap to the upside. I think people were looking for a bid, but it looks as though it was not. That wasn't actually the driver of the shares. Another gap higher last week, and a gap through our best case scenario target at £7.20. Above 7.20, we can perhaps upgrade the upside even further. The next big target here is up towards the £9 level, which could be hit by next month, the end of next month, while we hold above 7.20. So it's good to see the charting working, although it's a very volatile situation, working on a large cap situation at the moment. Onto a stock which I presume hardly anybody's heard of or been following in the recent past, but we've got Probiotics here as a sister stock, maybe to Optibiotics. Here we've broken a falling wedge, and that's been in place since back in February, as well as the breaking the 50-day line, blue line there around 4 3/4 pence, above 5 pence, looking for up to 13 pence by the end of next month at the top of that broadening triangle from the beginning of February. If it turns around, it would be quite a coup, I think, for the bulls, especially as it's on Aquis. Moving on to stock which has been one of the stars of the show over the early part of the summer, and that is Predator, lots of, I suppose it's climbing a wall of worry over the recent past, but we're seeing progress towards our target there, up to 28 pence by the end of next month, especially while we hold above last week's resistance around 18 pence. So while there's no end of day close back below 18, we could get up to 28 by the end of next month. On to a stock which see the cognoscenti amongst the Twitterati been following. Here we've got Seed Innovation, and here we had that sort of creeping along the, crawling around, sideways consolidation around the 50-day moving average. That's been rising for the last week or two, and we managed to push through the 200-day moving average on Friday. I think that's the first time we've been above the 200-day line for quite a long time, probably back in June last year, so quite an achievement there, a big turn there. We'd argue that we've just hit that line there around 2.5 pence. Or 2.4 pence. End of day close through 2.4, and we could be getting into a target there as high as 3 pence by the end of next month. Looks as though Seed is finally delivering after an extended inverted head and shoulders, very small head and very long shoulders on that particular formation. Only back below the 2.25 pence level really, June and then early July resistance, really delaying the upside scenario on that. Moving back to the Aquis market, and stock which is so sizzling by comparison to other stocks on Aquis at the moment. We've got TAP Global, and here what's interesting is that we've had all these beautiful white candles. We've had them since well, basically over the last week, 10 days, and we're just waiting probably now for the 50-day line to start rising. If it does, over the next day or two, we could be heading up to 3.6 pence, and the top of that broadening triangle from back at the end of March. This stage only back below the late May resistance of 2.75 pence on an end-of-day close, slowing down the perceived progress to the 3.6 pence area. Another stock that the eagle-eyed investors may have been looking at the moment is Touchstone. I've covered it quite a few times. It looked like this was a mid-move consolidation here after the final test of the 56 pence area. If we do break out of this gap, this flag here, around 78 pence on an end of day close basis, looking for 85 initially and then up to £1 as soon as the end of next month. That's quite an encouraging looking bull flag that we have there on the Touchstone chart. Big news from Upland today, and one or two people asking my opinion, my charting opinion, because that's the main thing they look for apparently. Here we've had an unfilled gap to the upside through the 200-day moving average for Upland. We've been looking for the top of that rising trend channel, or that triangle rather, from back in the turn of the year, as high as 0.95 pence over to be achieved over the next 4 to 6 weeks. That looks more likely now, so maybe we'll get there by the end of next month, 0.95, while we remain above the 200-day line around 0.53 pence on an end-of-day close basis. But let's see if the shares can make some progress through that late April peak there at 0.65, and that might be the level to wait for if you are cautious on the shares' credentials. Just a couple of stocks to go now. First one is Velocity Composites, which I've been trying to avoid, but it's just too hard to resist now after that bounce above the 200-day line and Friday's end-of-day close above a rising 50-day moving average. That suggests that we're in a rising trend channel from back in October, and that we could hit as high as 82 pence by the end of next month, while we're above the floor of the rising trend channel at 42 pence. You might want to stretch that time frame a bit, but this stock, when it moves, it really can move relatively quickly. Signs of recovery in the final stock of the day, which is Zephyr Energy, and the reason for saying that is that we already look like we're in a broadening triangle base. We've had a bear trap from below May support there around the 3.4 pence level, and we've had a gap higher today. So the gap higher today fills, it completes a bear trap island reversal, which is one of the strongest formations in charting, and that suggests that we could head up to 4.5 pence as soon as the end of next month, especially while we're above recent support around the 3.2 pence level. Be cautious, you wait for the RSI to break above neutral 50 before assuming 4.5 pence is on its way. That's it from me today. More updates tomorrow.